we would like everyone to know, wow, here's 468 contracts somebody bought. They bought those at 584. They really believe Amazon is going up. Anyway, welcome to stockmarketpunding.com. And basically, I'm going to pause the tape, and I'm going to get another level 2, and I'm going to show the 130 put, and I'm going to show the trade management here on how we do things, going long a call, buying a put at strike prices, and trading the equity in the middle. Once again, I'm starting a tape on a 115 call in the money, and this is a call chart, and the high was 1070, and how to buy the call at the bottom. There's been 1,976 of these 115 calls. They were in the money calls as Amazon tanked from 124.86, and I'll show the level 2. As Amazon tanked from 124.86 down to 115, the call premium got stripped. And so we are going to buy the 115 call that's slightly in the money, and it came right down to the 115.78 right at the strike. We bounced another dollar off the low. One thing that we do here is that we trade all three sides of the market. We trade the equity short, we trade it long, and at the same time we're trading the equity long and short. Well, what we are doing here is we are going to buy the call against this $130 put. We paid $4.50 for these last week. And there was a videotape done on Amazon, which was a live trade, and Amazon reported earnings. They gapped it up. First they gapped it down in after hours, and they gapped it up. Then the next opening day, they ran the stock all the way up. They opened it with a gap. When they opened it with the gap, we bought the 130 put. And basically, what we're going to do now is that we paid $4.50. I hit $14.80. We're making $10 in the contract. Now, we're not willing to come out of the Amazon puts. They dropped $1 on us, so what? What counts is buying this into the market. And basically, by combining the three trades together, is that this here we want to keep in our position management trade. And when we come down to the lower strike price where Amazon will have support, and they take 100% out of this call contract, here we want to be a buyer against this position over here. And when we hit the low intraday on the stock, we want to buy the equity and trade it as well off the bottom. So now we've got, we're going double long. The call is long. Going long the equity puts us a double long position against our wonderful 130 put position. So we've got a double long position working against the put. Yeah, we come down in value, but as long as an intraday level that you're trading a double long, you're not losing any of that 1480 value because you're making it up over here. Long the equity, long the call against the short. And one thing about the school is that we have mathematical formulas that work to the penny. And basically, this is all what we do. We're a market maker in the equity. We're a market maker in the options. We're not willing to take our profit here. We don't want to do that. Amazon could go lower tomorrow. But during the intraday level, people in the pro trading school are taught. So if you just bought these, let's say you got in at 530 and you sold at 580, and you had 50 contracts. You just added $3,000 to your position. And if you trade, we can get you in at the bottom, and you take a dollar move on 1,000 shares. You added $1,000 income here, and you added 3,000 here. That's 4,000. Even though if you had 10 contracts here and they drop down a dollar, yeah, you're losing a dollar, 1,000 on paper, but you're ringing the register on this side of the market. And basically, what another thing that you're doing here is that in this table right here, here is the, let me strip out the call there so you can just see the two levels here. This is up 96% today, the 130 put. The call option is showing you down 52.30%. But in reality, from the closing price down to the entry, it's 100%. It's 100%. So basically, you're going to learn that, you know, this guy just bought 265 contracts. Here, he paid 568. So basically, during different elements of the day, based on the equity trend of Amazon, which is this level 2 up here, that's the low. And we're finally, it's taken 2 hours to put that final low in. That will probably be the low of the day now. And we'll probably have to come back down and test it, or slightly above that number. And if it holds, then we'll be aggressive buyers here. The thing that we can do in this trade is that we could buy these as long, and we could even hold these overnight in case they gap Amazon up off of its oversold area. Yeah, these go down, these go up. Even if they gapped it down and these went up higher and these went lower, we are making so much money over here. It's really, it's totally pointless. And this is the kinds of things you're going to be taught here. You're going to be taught to be a high line level 2 professional trader in all areas of the market, constantly making adjustments, constantly trading against yourself, constantly having a double long against a short or a double put against a long. It really doesn't matter. And trading the intraday. That's the best way that I can explain it. And these are the call, the 115 call is traded on an intraday level only. So you ring the cash register there, and these are going back up in value, and these are coming down in value. So Bridget's got an order out there at $4.70. And we're going to see if Amazon can hold 115.78 or right above the 116 level where these flatten out. Once they flatten out again, we've got another wholesale bid below the market, but we can constantly buy this one because we're making so much money on this one. This was the first trade that was originated last Thursday, right here, and Friday. Today's only Monday of a new week. And basically, we did it on the great earnings report and traded the other side of the public. Not that the public's wrong. They're usually wrong on both ends. They're usually wrong at the high, and they're usually wrong at the bottom. Why is that? Because they're buying at the high, and they're walking away at the real bottom. And they're wrong on both ends of the market. And so basically, the wonderful thing and the gift that you have here today is that as you go through the free trial, as you visit www.stockmarketfunding.com, you are going to learn how to trade and become a top-line earner, both equity as a market maker in these. And remember that one of the trades have to be initiated before you can even do this. That's where understanding the equity reversal, working with weekly and monthly and daily charts will help you get this entry first. Then as it's working for you, then we start trading the other side of it at a strike price. So I may have the 130 for a long time. Maybe Amazon tomorrow comes down to 112 and I buy the 110 call against it. But we will constantly readjust our trade management